Thanks a lot, ma'am. So I think before I start, I think let's congratulate ourselves in the room, whoever has stayed so far, for staying so far back. There are only two categories of people who stay back at this point, in my experience. One, who are the knowledge seekers, so congratulations for that. Otherwise, who are the award winners, so congratulations otherwise too. See, I think Samir and Shrikant, they have given a regulator a last day slot because they know regulator has the last say, maybe. And 10 minutes because if a regulator speaks too much, causes trouble. In 10 minutes, I'll quickly take you through what's happening. I don't know how many people in the room have heard about GIFT City. And how many can speak on command on what's happening in GIFT IFSC right now? Okay, let me quickly take you through what's happening there, but I'm not here to upsell, but I'm here to tell you what's happening in India and what GIFT IFSC is trying to do. It's something that you would have seen. These numbers I will not bore you with. India is growing, everyone knows. But the real number is that India is growing with sustainable growth. I think what I have written in the bottom is something that you should read, that while the world is going back on its sustainable goals, what India has achieved the growth is while reducing the emission intensity of GDP. What it means is that we are also working on sustainable goal as we are growing. Very difficult for an economy of India's size. These numbers, again, more or less, all of us are aware about what's happening on trade side, what's happening on FPI. But the point is that in India, if you see the growth in terms of investors, in terms of capital market, it's booming. But key number is what you have written the bottom left of the screen. And this is a report which has come out with Niti Aayog. I encourage all of you to read that report. It says that for India to reach its net zero emission goals, India needs $22.7 trillion of capital. And that's the capital that India needs, out of which around $6 to $7 trillion capital. It's a gap in India, which means that capital has to come from outside India. What does it mean? And if you want to relate it, right now, how much are we investing? Currently, we are investing $135 billion annually. And what this number means is that we need to invest $500 billion of capital annually. Now, that is a startling gap. If you can understand what kind of investment is going now, what kind of gap we are looking for. That's where GIFT City comes in. Because what is GIFT City? What we are trying to do here is what you see in the screen are the businesses where we are talking about, when we talk about 2047, when we talk about India becoming a developed economy, what are the key parameters we are looking at? We are looking at self-reliance. What does self-reliance means? We are saying that we want to have our destiny in our control. But where is it relying so far? Where are investments coming from? Investments so far are coming from other countries. Your investors are hopping from Singapore and Mauritius. Your students are going out. Your bullion is getting priced in London Exchange. When your banks are servicing Indian corporates and the foreign currency, more or less, if you are a fintech here, you will be flipping your holding companies in Singapore or Cayman or Delaware maybe. So effectively, our destiny so far is inked with global jurisdiction. What we are trying to do, we are trying to bring it all into the country. And that place is called GIFT IFSC. We call it onshoring the offshore. That's what we are trying to do. And we have been able to achieve some amount of success here so far. And we work on 4 principles. We are saying if any business is related to India and related to foreign currency, we will bring that into GIFT IFSC. GIFT IFSC will become most competitive foreign currency related jurisdiction for the country. So if you are doing a fintech service and if you want to sell your software globally, GIFT IFSC will be able to anchor that most competitively. If you are raising funds, the GIFT IFSC will play a role. If you are getting the capital, GIFT IFSC will play a role. So this is a jurisdiction which is going to work in all the dimensions wherever cross-border transaction comes. One of the problem statements that all the individuals seek is that when you send the remittance, and it's an RBI report, you look at the transaction cost. Typically, in remittance comes around 6 to 7%. We are trying to reduce it down to 1%, and that's happening through the innovations we are doing in GIFT IFSC jurisdiction as we speak. Where is this city place? It's in Gujarat, and but it's a national project. It's not a state project. Why? What's the nature of GIFT City? GIFT City nature is that in India, we cannot have the foreign currency account, foreign currency businesses. And GIFT IFSC is completely opposite of it, which means that in GIFT IFSC, you can do business only in foreign currencies. We have permitted 15 currencies, and when I say we means IFSCA. IFSCA is a unified regulator. What does unified regulator mean? That by Parliamentary Act, this regulator has been developed with the unified powers of RBI, SEBI, PFRDA, IFRDA. So all the financial regulators combined into one is IFSCA for GIFT IFSC. So if you come into jurisdiction, you'll have to take license from us. We make the regulation, but we also do the development, and that's why we are here. So one thing is you have to do the foreign currency businesses. You have to take license from IFSCA. These are two key elements. So RBI's regulation, SEBI regulation do not apply in the jurisdiction. IFSCA has issued its own set of regulations in which different industries have come so far. We have issued regulations for payment, for banking, for finance company, for tech companies. Depending on your domain, you will have to look into this specific regulation and establish in GIFT IFSC. What you see in this slide is that we came out with the banks, and you'll be surprised to know that while we started our journey in 2020 end, so far we have got 40 banks, including 2021 foreign banks, multilateral banks. They are in IFSC, and all the Indian borrowing, around 40% of ECB borrowing in the country currently is happening from the zone. Trade finance will happen from the zone. Any borrowing in any nature in foreign currency, whether through capital market or the credit, it is happening from GIFT IFSC, and the entities are establishing there. India is sending its insurance as a reinsurance market into London market. If you know about insurance, the biggest market is called Lloyd's Syndicate. It's in London, and we have got the Lloyd's Syndicate is now establishing in GIFT IFSC jurisdiction. So we are getting the global insurance and reinsurance companies will be based there. And you also have this tech companies. After we looked at the capital market, 2 exchanges are there. And then we have funds. We have more than 300 funds, including sovereign funds, which have never come into India. They have established their presence there. So as an individual also, you can look at some of these funds, because Indians are investing globally through the funds structure created in IFSC by the AMC for the retail investors, and also NRIs are also investing in the inward structures. So very evolved jurisdiction in terms of fund flows. Apart from that, we have a specialized trade finance platform, finance companies, aircraft leasing, ship leasing. We are solving for country. We are dependent on Dublin right now for all our aircrafts. We want all our aircraft to be owned in the country, and we are bringing the aircraft leasing jurisdiction to GIFT IFSC. And ship leasing as a country, 95% of our exports are happening on foreign ships, and we have decided that we will bring all of that capital, sending $75 billion annually, we'll bring into the zone. Ship leasing, ship ownership is coming into ecosystem. Our tech companies, they want to become globally competitive, and tech ecosystem has been established in the jurisdiction. We have all the global tech companies from IBM, Google, Capgemini, Infosys, Wipro, and Cognizant. All of the companies are in the jurisdiction right now. So you have tech ecosystem, you have finance ecosystem. These are some of the numbers, maybe of your relevance. We have licensed so far 1,100 entities, and we have banking asset size is almost $106, $108 billion. On fund ecosystem, we have 300 plus funds, and there's a significant amount of debt listing on the ecosystem. Why they are coming here, and if you are following the budgets, so far in GIFT IFSC, we had given one big enabler. We had said if you establish in jurisdiction, you get a benefit on the business income tax, you will get a tax holiday for 10 out of 15 years, means consecutive 10 years. Post-tax, there was always a question, because in India, tax rate is very high. What is the tax rate there? This year, budget has come out with a very big announcement. If entities are established in IFSC, they have a tax holiday for continuous 20 years out of first 25 years. And after a tax holiday, the tax framework is 15%. Now, if you imagine this, and the way you should imagine this is you should think the countries, the biggest financial centers, we are competing with the likes of Singapore, Hong Kong, Dubai. These are jurisdictions which offer 15, 17. The DFC offers the 9% lowest tax rate. Compared to all these financial centers, there is a zero tax in GIFT IFSC for 25 years, and then 15%. Very, very competitive jurisdiction, especially a place where you can do the business in foreign currencies. However, your cost, your administrative cost is in rupee, and then you have a tax holiday. It becomes as competitive as it can be. Some of the companies which you can think, some of the brands you will know in terms of banks, in terms of tech companies, finance companies, aviation companies, GCCs, you have Bank of America, State Street, then you have IT companies there. You can see in ancillary services also, law firm, big fours, they are all present in the jurisdiction, growing fast there. considering I'm told that the people in the audience might be the banker, maybe the tech companies, maybe the finance companies, or trade finance specialists, so I've just cornered out a couple of pointers here for you, which will be relevant. If banks are coming into the jurisdiction, what you're seeing is that we give one license. In this, they do the wholesale, retail, all kind of transactions are done under singular license, unlike many foreign jurisdictions. And what activity we are seeing so far, more than 12,000 NRIs have opened the accounts, and they are already investing into India through GIFT IFSC. We have done this. We are the first regulator who has come out with sustainable lending norms, and we have come out with a unique. I think what you see the TRADS platform in the domestic equivalent of that is ITFS platform. There are 4 ITFS platforms which are solving for the cross-border trade finance for the country. And the way these platforms are structured, you can take the insurance on the platform itself, and buyers, sellers, financiers can tap into the same platform. Even the financiers not in IFSC or India, those financiers can also do the finance on those transactions. We are trying to solve for MSME financing through GIFT IFSC, and when government established the digital rails for MSME financing, we will plug in this platform into those digital rails so that it becomes seamless for Indian MSMEs. I think one interesting development is in GIFT IFSC is what we call foreign currency settlement. If you understand how dollar or foreign currency works, is typically when party A want to pay to party B, the transaction doesn't get settled in this jurisdiction, funds go to US, Nostro account, and then it hops back. Only one country, probably you can think of Hong Kong, which has done a local clearing for that. And after that, you must have seen in the GFF that happened, and FM announced this initiative from IFSCA, where we have launched the foreign currency settlement in GIFT IFSC. What it means is that when a transaction in foreign currency is made from party A to party B, it will not go to US, it will be settled within IFSC. This is what we call local settlement of foreign currencies. What it means, it is a real-time, it's like RTGS, how it's happening in domestic for rupee. Similarly, in foreign currency is going to happen in IFSC. These things are already live as we speak there. This is one more opportunity that will be relevant for a lot of you, is what we call as payment service providers. I think a problem statement that came to us is that a lot of Indian exporters, they want to export, they want to realize their funds, and in retail remittances are also seeing a lot of credit costs or a lot of process cost when they are doing the transaction, 5 to 7%. We have enabled a PSP regulation, payment service provider regulation. Many entities from domestic and international countries, they have already taken this license from IFSCA. In this, we allow the entities to do the onboarding of customers directly, and they can open an account. They can give a virtual account to the customers. They will open an account with a particular bank, and they can also provide e-money services, escrow services. This is one solution which is scaling up very fast. For tech companies, I think this might be something of interest. Tech ancillary, this is a framework where we have directly invited the tech companies which are providing solutions to the financial companies. They can also establish an IFSC. These are not in the financial sector, so we have carved out a different regulation for them, which call it TAS, technology and ancillary services. So Infosys, Cognizant, etc., the names that you see, these companies will be coming under a TAS regulation. Apart from that, we also have Sandbox. In the Sandbox, we have many entities. I think one of the previous sessions, ScienceG, they had participated in the Sandbox that IFSC has launched. But some of the use case in IFSC Sandbox, you can see here, we are working in Web3, distributed ledger technology, alternate traded platforms. These are live cases that are happening there. And then there are so many other cases, different scenarios. One advantage of IFSC is that it's unified regulator. As a unified regulator, use cases that we see in our sandboxes are one which are cutting across various verticals, and it's very interesting to see. And these are different use cases that we have seen in the sandboxes so far, which have exited. Having said that, I think from FinTech, from TechFin, from financial industry, I think you are encouraged to look at our website, IFSCA, and maybe you can reach out to us through the organizations directly as well for further discussions. I'll take a pause here. Thanks a lot. Any questions here?
So on your last slide, you talked about, the exits. What has happened to them? Have they failed or they have succeeded and done something else, gone on to establish something?
No, they're a mix of it. So for example, if you say payment service, payment regulation that we talk about, PSP regulation, that actually came from the sandbox because some of the entities came and they wanted to work in that area. So after the entities come into sandbox, they have to exit, they have to fit into our regulations. If they cannot fit into regulations, then we need to bring out the regulations. So in PSP case, we brought out the regulations and they are put into PSP. But then there are many other which are working for which we are not determined, we are not sure what kind of regulation we have to bring out. For example, in the Web3 areas, and they want to work in the areas of tokenization, we are still not out with the tokenization regulation. It's in discussion with the industry. So they have exited, you can say, without coming into IFSC. So they are a mix of these exits. Thank you. That's it. Thanks a lot. Okay.
Thank you so much, Shri Ashutosh Sharma, sir, for sharing such valuable insights with us. I now request Mr. Shashank, sir, to please come up on the stage to present a token of appreciation to Shri Ashutosh Sharma for sharing his key insights today. Can we give them a huge round of applause, please?